Welcome to Sense and Sensibility, the Inflation Guy podcast. I am Michael Ashton. I am the Inflation Guy. I am your host, and this episode of Sense and Sensibility is sponsored by SupplAI ETFs, a fast-growing manager of liquid alternative ETFs. SupplAI is bringing Wall Street to Main Street by providing access to institutional strategies perfect for diversifying your equity and bond portfolios previously only available to big institutions and the ultra-rich. Check out their website at simplify.us. That's simplify.us, and you can find their entire lineup of ETFs at simplify.us/ETFs. Actually, I'm not really sure that they're a small manager anymore. They're going to be quite large, and I'm sure that part of it is that all the people listening to this podcast are going and finding out about SupplAI and considering their products. I don't know if that's true or not, but I'd like to think so. Now, today I had an idea. And as my dad used to say, well, then let it out so it doesn't die of solitary confinement. It's not an answer, but it's a question. And as many of you who have listened to this podcast for a long time know, my philosophy on research and podcasts and blogs and things like that is that I can add occasional value with the right answers. But sometimes I will think I have the right answers, and in fact, they won't be the right answers. So what I do know, though, is that I should be able to almost always add value with the right questions, or at least good questions. And so that's sometimes if I don't necessarily know the right answers, I still want to ask the right questions. And this is in the category of something where I think it's the right question. I think maybe the way I think about it is kind of on track to being the right answer, but it's at least a question that's worth thinking about. And the overarching question, the overall, I guess, challenge to figure out that we're all trying to figure out is how big of a deal is AI? Is it world changing? Is it nation changing? Is it life changing? Is it, a base necessity of life? Is it a nice to have? Or is it irrelevant? Where in that spectrum is it? From the way that markets value AI-related companies, it seems the fundamental thought is that AI is world-changing and that therefore any company that is remotely related to AI ought to be worth, a gajillion dollars. And I've heard people, and I know we've all heard people muse about how there's going to be this massive unemployment because AI is going to basically, take away all the jobs. Everything's going to be done by AI. That's the dystopian view. And then on the other side, the utopian view is that almost no one's going to ever need to work because AI is going to just handle so much of what we need to have done. But either way, it's going to be huge, really huge, and really important. And you need to get into the stock market right now because that's... you can make a lot of money just betting that it's going to be huger than everyone else who's already said it's just going to be really huge. Weirdly, people don't seem to be as concerned about the massive power demands from having ubiquitous AI. I mean, energy prices have been sliding now for a while, and gasoline prices are now at the lowest level since 2020, and but maybe AI is going to figure out where all the energy is going to come from if it's not going to come from fossil fuels, whatever. Okay, so I guess it's no surprise, shouldn't be any surprise to any of us that markets are, they're in the short run, they're voting mechanisms, in the long run, they're weighing mechanisms, and we're not to the long run yet. So right now, everyone's voting that AI is going to be really, really terrific. And of course, the technology is gee whiz. There's no question that AI technology is gee whiz. The same as blockchain technology behind crypto is gee whiz. The same as internet technology, was gee whiz. I guess it probably still is. The same as any new technology, frankly, is gee whiz when we first kind of get it. But then why haven't all those things changed our world already? I mean, they have changed our world, but why is it that our GDP, plotted along through all of those old technologies with almost no measurable change in output or productivity, if you sort of look at a logarithmic chart of the growth and output in the United States, you can't really spot the internet bubble. And there's a little bit of an inflection, but it's a really tiny inflection, and that seems crazy because we all know that the internet is changed everything, right? But it didn't change total output by any faster than it was kind of already changing. So why is that, other than the fact that, that GDP development depends on new technologies happening. And so that was just the technology of the day that was just in the process of happening. It just seemed to be more GDP. Okay, that's one potential way of looking at it. But I'm not going to be arguing that part. I had a conversation with a beautiful woman the other day. Okay, it was my wife. Okay, it was my wife. But anyway, she was talking about some communications project that a donor company, she works for a nonprofit, and there was a donor company that had asked for this, asked for her organization to undertake, really, kind of, sort of glitzy, write up about, how wonderful the donor, company was being to the donee company. And it sounded like it was fairly elaborate the way she described it. But my wife said, well, it won't be too bad. AI will do most of it and I'll clean it up. And I asked, well, gosh, I said, this is going to be a big time saver for you. AI is going to be a huge time saver then. How many projects like that have you been asked to do over the last few years? And you're going to be saving this much time on all of them. And her answer was 0. And so upon probing further, it seems like the project really was very elaborate. And without AI, it was so elaborate, it would be a tall task. Without AI, the donor knew that it would have been pretty elaborate and wouldn't have asked for it. Or they would have had to donate a lot more money to get the pretty communications they wanted to get out of it. But they knew that given AI, it wasn't quite the tall task it would have been prior to AI. So AI not only created the solution, and this is really key. This is the key point. AI not only created the solution, it also created the problem. And that kind of got me thinking, hey, supply creates its own demand. Sidebar, Your Honor. That phrase, supply creates its own demand, comes from Jean-Baptiste Say, who is an economist who invented the phrase, which through an incredible coincidence is called Say's Law. Okay, it's not really a coincidence, but it was named after him. Anyway, but what his theory was that when you produce a widget and you sell it, and you take the money from selling it and you pay the workers who made it, then the workers then have the money to buy the widgets that you made. And so supply creates its own demand because the supply generates the money that then goes to people who can then be the demand who goes and buy the stuff. So it's a little bit like an economic perpetual motion machine is sort of the way to think about it. Not really perpetual motion machine, but Say did think that this meant that recessions should be unusual. And to the extent they happen at all, they should be caused by wrinkles in the production flow where it didn't quite match up to, the money didn't kind of come through as quickly as it needed to be able to buy all the stuff. And, normally it takes 3 days and for some reason now it's taking 4 days, and that little wrinkle of the extra day is what causes a recession. Anyway, that's not at all what I mean here. It's a nice little sidebar, a little education about what Say's Law is. This is the value of a liberal arts education and a major in economics, is that you learn stuff like that. But that's not what I mean here when I say supply creates its own demand. What I mean is that when you introduce a new technology, any new technology, I guess, two things happen. The first thing that happens is that it solves a problem, if any, that it was designed to solve. The cotton gin. So the cotton gin solved the problem of taking seeds out of cotton that had been harvested so that the cotton could be used. And prior to the cotton gin, this was all done by hand. And someone said, hey, we need a quicker way to do this. So they invented the cotton gin. I believe his name was Eli Whitney. Invented the cotton gin, and that solved that problem. The second thing that happens when you introduce a new technology is that it solves a problem that no one realized was a problem until they saw there was a solution for the problem. Cotton gin is a bad example here because, as far as I know, there's no secondary use for cotton gin. But a better example comes from another beautiful woman. Hedy Lamarr, starlet extraordinaire, also an inventor. She invented a method of frequency hopping radio signals. And it was originally designed around World War II to prevent radio-controlled torpedoes from being jammed. So they had these radio-controlled torpedoes. The problem with a radio-controlled torpedo is that somebody who can jam the radio signal makes your torpedo kind of useless. It just kind of goes out in the ocean and doesn't hit anything. And so Hedy Lamarr said, well, you can only jam it if you know what the frequency is. We'll make the torpedo hop to the different frequencies, and we know what those frequencies are going to be hopped to, so we can communicate with it, but nobody can jam it. So that was the original use and the original problem that it solved, although the Navy didn't actually take her up on it. It wasn't until much later. But that was what it was originally designed to solve. Later, that exact same idea became part of a foundational part of spread spectrum communications, the things that are used in lots of wireless gizmos today, like your phone. Go look it up. Hedy Lamarr, fascinating story. Also invented some other really interesting stuff. But that one is always amazing to me that something that was designed to help people or to keep people from jamming torpedoes ended up being a major part of wireless telephony today. So anyway, back to the current story. So those are sort of the two things that happen when you introduce a new technology, a thing you meant to have happen, and then other applications develop that you'd never even imagined. Which actually, I could tell now a story about the USDI coin, but that's another time. So back to the current story. So when the cell phone was introduced, and even more when the BlackBerry was introduced, people thought there would be this massive increase in productivity, right? Because suddenly, now you can be working, you can be talking to people outside of the office, you could be, sending emails and stuff like that. Was there, and this is a quantitative question, was there a massive increase in productivity? And the answer is, and it isn't in the data. There is a modest, years later, as we've, gone and back and looked at all the data and with now actual data rather than estimated data, we can see that there was a very, very small increase in productivity that happened around that time. But it was quite small and it didn't last all that long. Clearly, we were all doing more work, which sounds like being more productive. But what actually happened was the number of actual hours worked by a non-production worker went up, people like me. But the total output of those workers and the official hours worked didn't change very much. The assembly line produced about the same amount of stuff. And those of us with cell phones worked longer hours because we were, someone would call us at dinner. But what were we doing if the assembly line, whatever it was that we were producing, wasn't putting out anything else? Mostly what we were doing with cell phones was answering the boss's dumb after-hours musings. And the boss's dumb after-hours musings had always been there, but they just never wasted anyone else's time until the cell phone. And so the cell phone did some amazing things, but also did lots of things that really were just waste of time. Were new applications, but new very low value applications. Now, this is obviously just my speculation, just my asking a question. In the past, I've generally pushed back on the whole AI Brave New World thing because similar leaps in technology in the past have not generated surges in productivity and output. And I just mentioned the whole internet bubble was, everyone thought it was the end of history, and it turns out it really wasn't that big a deal in terms of total productivity. This one could be different. It could be that AI really is the greatest thing ever, and it revolutionizes everything. But this is a different argument that I'm making. It really is two arguments when I boil it down. One of them is that the first argument is that, okay, AI is handling more of what a worker does, but it doesn't lead to fewer workers at the margin, maybe, but it doesn't lead to lots fewer workers because workers are being asked for stuff that no one asked before, but now is expected. So it takes less time than it would have before, but before it wasn't worth doing at all. By definition, this is low-value stuff that AI is picking up. So, for example, I've spoken to attorneys who have mused that some associate-level jobs, entry-level, associate-level jobs, could be replaced by AI doing basic, legal research and stuff. Maybe. But you know what will also happen is that people will start asking questions of the AI associate that they never would have wasted a real associate's time with. Probably because the cost of the billable hour for the AI associate will be much less than an actual associate. So $200 an hour will be $50 an hour to have an AI associate handle the problem, or $20 an hour, or whatever, or a really high price per hour, but you get the answer in 6 seconds. And so you can ask a question that you can have answered in $10, for the cost of $10. Whereas if you ask an actual law associate, you will not ever get an answer. Even if you say, "How are you doing?" you will never get an answer that costs you $10. Every answer will either cost you zero because it's rounding error, or it'll cost you something considerably higher than $10. So people will start asking questions of this AI associate that they wouldn't have wasted a real associate's time with. And the question is that a gain? To you, to me, to the system? All right, maybe. But it isn't a big gain because by definition, it wasn't worth asking the question before. I mean, we always could have hired another associate before AI came along, but we didn't. We just asked fewer questions and more important questions. So by definition here, a lot of these questions we're asking AI will be less valuable. And the second argument is sort of related to that, in that by increasing the output of valuable stuff, AI will also decrease the value of that stuff, so that the net effect in terms of dollars of output is mild. So, for example, if AI writes books or makes art and just churns that crap out, okay, whether it's good or bad, the overall supply of books and art is going to go up enormously, so that the value of each unit, including all the good ones, will decline. And so what happens to net output in that case depends on whether the elasticity of that market. Lots and lots more books, lower value. What's the total dollars of output? Indeterminate. So, and by the way, all of these things that we're talking about with AI, or all the things that I'm talking about with AI here, isn't production the same way that building a car is. So, how does any of this increase the number of cars built? I can't think of how AI can have a big effect on that. Maybe it can produce better cars. AI can figure out a better way to design a car, or maybe a better way to design an assembly line. But I don't see how that produces more cars. The number of cars being produced is kind of related to the demand for cars. And AI isn't going to increase the demand for cars. So I don't really see where it kind of fits in there. And I guess that's kind of the opposite. It's kind of the reverse of Say's law, I guess, right? The lack of demand creates a lack of supply. But anyway, look, dear listener, I don't hate AI. Earlier today, I asked ChatGPT, just literally today, I asked ChatGPT, I said, design me a 5.5-week training program for a 5K. That puts me at the turkey trot. Building off my just completed 10K and respecting my current pace and my target pace and the days I can work out. And it came up with a wonderful, a really terrific training program. I'm going to give it a shot. Of course, it also said, today it said, run 4 800-meter intervals at 8 minutes per mile, which is about, it said 4:56 per mile, or per interval. 800 is about half a mile, and if I'm running at 8-minute pace, it should be around 4. So we still have some math challenges with AI. But anyway, it was really good, and it really, other than fixing the math, it was kind of impressive. And last week, I got Claude AI to write an R language script to manage a cryptocurrency wallet and send an email to me, or to monitor it in a cryptocurrency wallet, and send an email to me when the balance breached certain levels. It took an hour to get that done on Claude AI instead of a day or more writing it myself. But before AI, I could have just written my training program, my running program myself. And I would have simply manually checked Etherscan to get the wallet balance or figured out some other low-tech way to do it. Or I would have just lived without the information because it's really not all that important. So AI did make my life better, but would it have been much worse without AI? Would I have worked long hours to write that code? No. So I wouldn't have had the code, but I would have had one more hour. The hour that I spent on Claude AI would have been my hour. So, I mean, I obviously I'm better off, or I wouldn't have spent that hour to do it. But lots better off? I don't know that I am. So the important observation is this. AI is cool. It does cool things. It also does scary things, but it does cool things. But how many of those things are things that didn't need doing or weren't done before AI came along? That's a leakage. That's a leakage to the whole gee whiz story of AI, the whole gee whiz moonshot of markets based on the idea that this is world changing. There's that leakage that it's also a drag. Like I said earlier, it's a solution, but it also creates the problem that it then solves. And that's not a net gain necessarily. So is AI world changing? I'm sure at some level, there's no doubt it is world changing. But is it trajectory changing? I don't think so. And I don't think it's as changed as we think. And I think that as with the internet bubble, someday markets will figure that out. And I hope to not be involved when that happens. Anyway, that's all for today's podcast. Please like, subscribe, refer others. You can contact me at inflationguy@enduringinvestments.com. Subscribe for free to the blog at inflationguy.blog. Follow me on X at inflation_guy. Visit Enduring Investments if you need help with diagnosing and treating inflation problems. And most importantly, defend your money. And if inflation is coming for you, remember, you know a guy.